Hi folks, welcome to lesson 6, all about retained profit. Wherever you see Edna, then you need to click on Edna to get some help with the lesson and actually listen to what the lesson is about. Retained profit. In order to understand what retained profits are, you're going to need to use your previous knowledge on gross profit, net profit. The new vocabulary on this lesson is retained profit, dividend, inventories, and ROCE, which is return on capital earned. As you go through the lesson, you'll get familiar with these new terms. Well, you need to use the information you had from lesson 5. It's here again just in case you've forgotten what it is. You've got to work out some figures for Felicity's fabulous florist. You need to calculate her gross and net profit. Even if you have done it, it wouldn't be any harm recalculating it and working it out. Remember, you'll probably need your financial formula in order to remember what the gross profit formula is, and then the financial formula for calculating the net profit. A tip, you've got to work out cost of sales on this one and expenses. Now you have the figures for gross profit and net profit. This is where you start to make your investment decisions on retained profit. So in order to actually understand retained profit, it's not a calculation or a formula, it's about what you do with that final piece of profit, that net profit. What is retained profit? The principle is simple. When a business makes a net profit, the owners have a choice. Either extract it from the business by way of a dividend, you're going to have to look that word up, or reinvest it by leaving profits in the business. Where do retained profits sit? Some might be in the bank, some might be spent on additional plant and machinery. Perhaps some are reinvested in more inventories, which is stock, or used to reduce overdrafts or loans. Have a read of the main advantages and disadvantages of retained profits. You're going to need to use this information for your final question in this lesson. The simplest way to look at retained profits is to go back and remember what we've done so far on the financial statement. We've gone through turnover, cost of sales, and gross profit. Then we've looked at expenses, which you deduct from gross profit in order to get net profit. So net profit is what it's called when it's at the end of the calculation. And in order to make the decision, and your investment decision, think of it simply as you're changing what it's called and you're now calling it retained profit. So that's what we really need to think of what it is. And that little red highlighted on the right, ROCE, is called return on capital invested. And what that means is when you've got your profit left over at the end and you reinvest it back into the company, you expect something back from that investment. Well, shareholders definitely do. They expect a return on the money they've invested. They expect a return on the capital they've invested. They expect the capital to earn the money. So there you go, that's the progression of that phrase, a return on capital invested. Question 1. Explain the difference between net profit and retained profit. Write the answer in the box underneath. Question 2. Looking at the costs and expenses of Felicity's business on the table on the earlier slide, suggest one way she could increase her retained profit. Just to recap on question 1, the difference between net profit and retained profit. Remember the discussion on the last slide where we looked at what retained profit actually meant. What we're going to do in its simplest form is look at net profit in terms of what you get when you finish the calculation, and then you rename it because you're going to make an investment decision, and now you're going to look at what you're going to do with your retained profit. So retained profit is your investment decision. Your final question. Now you understand the terms retained profit. What should Felicity do? Should Felicity reinvest in the business with more machinery? For her, that would be things like wrapping for bouquets, fridges for flowers, etc. Or keep the cash in the business, or take a dividend. You'll need to use the information on slide 4, which are the advantages and disadvantages, and then you can actually express your opinion here. But as long as you justify your opinion, you can't go wrong. So have a look at your gross profit and net profit. Have a look at some of the figures that were given to you on slide 3. On slide 4, you're then looking at the advantages and disadvantages of what to do with retained profit. And on the final slide, it's about you demonstrating that you understand financial performance of a business.